Every government claims to serve the people, and every politician promises stability, prosperity, and growth. Yet behind the political theater, beyond the speeches, the campaigns, and the endless promises lies a power far greater and far quieter than any elected office. A force that does not need votes or public approval, yet shapes the destiny of entire nations. That power is the central bank. Central banks do not campaign or appear on election ballots. They operate in the background, in conference rooms and financial hubs, away from the public eye. Most citizens cannot even name the individuals who lead them, and yet, their decisions ripple through every part of the economy. With a single policy change, they can make your mortgage cheaper, your savings weaker, or your retirement uncertain. They control the supply of money, deciding when to expand it, when to restrict it, and ultimately, who benefits and who bears the cost. Their influence extends beyond politics, shaping markets, industries, and even governments themselves. When economies falter, it is not presidents or prime ministers who rush to the rescue, it is central banks. They lend to governments, bail out institutions, and stabilize markets often without a single democratic vote cast in their favor. This is the secret history of central banks. Institutions that began as tools to fund wars and manage credit, but have evolved into the real power brokers of the modern world. They are silent, technical, and unelected, yet their reach extends into every home, every paycheck, and every nation's future. Behind every promise of growth and prosperity lies their invisible hand, guiding, manipulating, and ultimately controlling the flow of money itself. To understand their rise, we must go back to the 17th century. Europe was in chaos. Wars drained treasuries. Kings lived extravagantly, and governments were always short on one thing: hard money in England. King William III faced an impossible problem. He needed cash to fight France, but lenders didn't trust the crown. Monarchs had a bad habit of not paying their debts, so a new institution was born. It had a unique privilege. It could issue paper, notes, promises backed by the government's debt. For the first time, money wasn't just metal coins. It was credit, backed by the word of the state. The Bank of England became both the king's creditor and the nation's banker. And the message was clear: control credit, and you control the state itself. Other nations followed. Sweden had the Riksbank in 1668. But it was the Bank of England that became the model for the world. Through the 18th and 19th centuries, central banks spread across Europe, each one intertwined with governments hungry for money to fund wars, empires, and industrial expansion. By Napoleon's time, war was financed as much by credit as by gunpowder. Britain's ability to borrow, through its central bank, allowed it to outlast France, and the pound sterling became the financial anchor of the world. Wars were no longer just fought on battlefields. They were fought and won in the balance sheets of central banks. The real transformation came in the 20th century America's banking system was chaotic. Hundreds of banks, each issuing their own notes. Panic struck often in 1907. A collapse on Wall Street spread across the nation. Banks failed. Depositors panicked. The system teetered on the edge, and it wasn't Congress that saved the day. It was a private banker, J.P. Morgan, from his mansion. Morgan gathered the nation's financiers, locked the doors, and forced them to pour their money into the system to stop the collapse. One man, a private citizen, had stabilized the American economy better than its own government. That terrified Washington. The solution? Create an institution that could act like Morgan but for the nation. In 1913, after secret meetings on Jekyll Island, Congress created the Federal Reserve System. Independent from politics, but deeply connected to Wall Street, it could issue currency, set interest rates, and act as a lender of last resort. Privately influenced, publicly sanctioned, the most powerful financial engine the world had ever seen. World War I was the first great test. The costs of modern war were enormous. and no nation could fund it through taxes alone. So, central banks printed money, issued bonds, and kept governments alive. The gold standard, the old anchor of stability, was abandoned when survival is at stake. Central banks always financed the state. The printing press was no longer a last resort. It became policy. The result: runaway inflation. In Germany, the Reichsbank printed marks until they were worthless. A wheelbarrow of money. For a loaf of bread, the Weimar nightmare had begun. Yet, even that disaster didn't end the experiment. It proved the opposite, that central banks had become indispensable. After the Great Depression and 2 world wars, governments sought to rebuild global stability. In 1944, at Bretton Woods, 44 nations gathered to design a new financial system. The US dollar, backed by gold, would be its foundation. Other currencies would peg to it, and new global institutions. The IMF and World Bank would oversee it all, behind the curtain. One truth emerged: the US Federal Reserve. And the Treasury now sat at the heart of the global economy. Money had become geopolitics. But in 1971, the illusion shattered. Facing rising debt from Vietnam and domestic spending, Nixon severed the dollar's link to gold. From that day, money became pure fiat, backed only by government decree. Managed by central banks, the age of restraint was over. Central banks could create money at will, and they did. In the 1980s, Fed Chairman Paul Volcker raised rates to nearly 20% to kill inflation, causing a brutal recession. But restoring trust in the dollar, in 2008, when the global financial system imploded, central banks printed trillions to rescue markets. They called it quantitative easing. For Wall Street, it was salvation. For savers, it was silent theft. The rich got richer, and the rest paid through inflation. Then came 2020, pandemic, panic, printing presses on overdrive, trillions. Conjured with keystrokes, stimulus, bailouts, rescues all justified in the name of stability. But every rescue breeds dependency. Every bailout tightens the system's addiction to central bank intervention. Governments now spend recklessly, assuming their central banks will keep rates low. Markets gamble boldly, certain the Fed will save them. Yet history teaches us every illusion eventually breaks. The Bank of England faltered in the 1700s, the Reichsbank collapsed in the 1920s, Bretton Woods died in 1971, and one day, this system too will face its reckoning. What does all of this mean for you, the ordinary citizen, worker, saver, or business owner? It means that the real decisions shaping your financial life are not being made in Parliament, halls, or presidential offices. They're being made quietly, in conference rooms filled with economists and bankers, the headquarters of central banks. These institutions, not elected officials, now manage the true heartbeat of the global economy. When central banks print money, prices rise everywhere. Groceries cost more, fuel becomes expensive, and the value of your savings quietly erodes. When they raise interest rates, borrowing becomes harder. Mortgages double. Small businesses struggle. Entire economies slow down. And when they rescue financial markets, as they so often do, the benefits rarely trickle down. The wealthy, who own the assets, recover and grow richer. The middle and working classes, who live paycheck to paycheck, bear the hidden cost through inflation and debt. This is the invisible hand behind every economic boom and every bust. It is not capitalism or democracy alone that drives these cycles. It is monetary control, wielded by a small circle of unelected technocrats. The entire global economy runs on trust, an invisible thread that binds people, banks, and governments. We trust that our money will hold its value tomorrow. We trust that the banking system will honor deposits. We trust that the authorities will act responsibly, but trust is fragile, and once it breaks, no central bank can simply print it back into existence. True stability, therefore, doesn't lie in currency manipulation or interest rate policies. It lies in things that cannot be fabricated or inflated: gold, land, skills, innovation, and productive enterprises. These are the anchors of real wealth, tangible, lasting, and immune to policy shifts. The so-called secret history of central banks isn't hidden in confidential files or conspiracy theories. It's written openly in every economic crisis, every bailout, and every inflationary spiral that has shaped modern history, from the Bank of England's rise during wartime to the Reichsbank's collapse in Weimar Germany, to the Federal Reserve's interventions in 2008 and 2020. The pattern has remained the same. Each crisis strengthens their role. Each rescue expands their authority. And today, central banks have evolved into the silent rulers of a global financial empire, influencing the fate of nations with the stroke of a pen or the click of a keyboard. They are unelected. They are unaccountable to the public in any direct sense, yet their policies shape your daily life more than any politician's speech or campaign promise ever. Will they decide whether your savings lose value, whether your business can borrow, and whether your government can afford its debts? This is the paradox of modern finance. People we never vote for control the money, cannot live without it. It is power without visibility, control without consent, and influence without boundaries. So, the next time you hear about interest rate decisions, quantitative easing, or inflation targets, remember these aren't abstract economic terms. They are levers that determine your cost of living, your job security, and your future prosperity. And if this perspective gave you pause, if it made you see the world of money in a new light, then keep watching, keep learning, and question what you've been told. Because the answers to our financial future aren't hidden in tomorrow's headlines. They've been written in the past. Carved into centuries of monetary manipulation and economic evolution, the story isn't over. But understanding it is the first step to seeing the world as it truly is.